Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. We are just about to wrap this week up. What a week it's been. For the most part, the Federal Reserve really, sometimes we know they wake up and choose violence. Yesterday's press conference definitely was not that. Very steady in terms of expecting the quarter point cut, getting the quarter point cut, and then into the press conference. Not a lot of reason for traders to be too concerned, at least for now, about whether or not the Federal Reserve is still willing to keep with the pace of cutting rates. Now, there's a couple places we can look, right? The magic decoder ring of the Fed watch, or even other places like what's going on with the US dollar, what's going on with bonds. Bond yields, at least for now, seem to have put in a minor low, maybe a bottom, but I'm not going to go that far because we're still in a downtrend and yields are still higher than we would think they would be based on expectations for continued rate cuts. All right, so let's go take a look at the 6E. Is the US dollar weakening a little bit again? Now remember, when any central bank starts embarking on rate cuts, and it's not anything insidious, it's just part of what happens, the currency of that country weakens. So very naturally, the US dollar should weaken some, depending on its relationship with the other currency, the counter currency. But the US dollar should weaken some as the monetary policy shifts dovish or favors rate cuts. That's all that dovish means. And then equities like it, but equities have been expecting this for a little while. So let's actually jump on over to the FedWatch tool. Now, November was baked in. I'm actually really surprised that December is still, there was nothing really dovish that Jerome Powell said, but there's nothing really not dovish either. So things are pretty much status quo. December is still 68% likely to see a quarter point cut, while there's a almost 32% expectation for a hold. Now that's not good. It's not bad. It just is. We'll see what these are doing as we go through the remainder of November and whether or not the data, mostly jobs, followed by retail sales and consumer behavior. And then, of course, what we see with inflation. But ultimately, it's still far more probable that we'll see a rate cut in December as well. But January and March still look very, very confused. There's not a lot of clarity that if we get a rate cut in December, that we will get another rate cut in January, that we will get another rate cut in March. That's still a little muddled. And that's why things like bonds and even equities are going to look to where our rates going to be. And they're just not seeing a clear path to lower rates really much past December 18th. All right, so that's where we are right now in terms of our macro, what is the Federal Reserve said. What about our indices? So yesterday, we in the Sector Secrets Mastery decided to look at IYT and XLF, two relatively outperforming sectors in the broader averages. I would like to buy the S&P at some point. I'm really looking for a pullback to the volatility support of the daily price movement range. And I would have no issue buying a pullback on the NASDAQ. But when it comes to the Dow, I don't know that right now I want to focus on index buys, in other words, DIA or YM in the Dow. In lieu of that, we will go with IYT, we will go with XLF, we will go with better performing sectors within the Dow, because we still have a lot of heaviness in two of the heavily weighted sectors in the Dow, namely energy and healthcare. All right, so that's where we are with the indices. And then some folks were asking me, as far as the NASDAQ goes, are we seeing the Mag 7 wake up again? Are we seeing that kind of strength? All right, does the dog want to come in? By the way, Mastery folks, the pup's in the house today, but she's hanging out outside right now. All right, so Nasdaq, am I ready to commit to long positions in tech, our so-called Magnificent Seven? Some stocks in some sectors within the Nasdaq are more magnificent than others. If we take a look at Nvidia, it's the best looking stock within semiconductors. In fact, semiconductors don't look great. If I'm looking at Apple, really not interested in Apple. It's barely getting out of its own way in terms of the bearishness that we saw with the red candles. It's kind of going neutral. So my thought is, look, Apple might be able to pull itself out of this kind of chop. But, is there anything that has better structure? Yeah, Amazon, far better. Right. So if I'm thinking about magnificent, Amazon would definitely have more, for me, expectation of continuation. Green candles, we're actually starting to see a little bit of an uptrend. We know Tesla's been moving higher. I don't want to bet against this, but it's not a symbol that I trade actively. But remember, if you're looking at Amazon and Tesla have a lot in common because of their weighting, their inclusion in the XLY consumer discretionary, which is one of the better looking sectors in the NASDAQ. XLC has been an outperformer for a really long time, mostly on the prolonged strength that we've seen in telecommunications, which are fairly heavily weighted in XLC. So that's what we have there. So XLC, IYZ. Now, what's in XLC? Meta really is bullish mostly, but choppy. So my question then becomes, of all the things that I can do in consumer discretionary, let's jump on over there for a moment. XLY. What's the best looking, not XLV, that thing's ugly. Oh, actually, let me pull up what an ugly sector looks like in a sector that we by and large want to avoid. Yeah, it's just a big cup of nope. But let's go to XLY. There we go. All right, taking a look at XLY, you'll see that Amazon has the uptrend. I mean, who trades Booking? But Booking has an uptrend in Airbnb, right? It's like tic-tac-toe right there. Amazon, Booking, Airbnb. That's where the clarity, the trend is best. After that, yeah, for sure, Tesla. What am I going to avoid? Anything with red. So no McDonald's, no Lowe's. Home Depot is a Nike, big cup of nope. And then what looks okay? I wouldn't even really put it anywhere near the top of the list where I would have Amazon, Booking, Airbnb, Tesla. We have things that are sort of neutral, but really not that good, like Starbucks. And I think a lot of traders, if you're looking at breaking down a sector and you're trying to compare this, right? This Starbucks, which is kind of in the middle, not good, not bad. Do you see the difference? Does everyone see the difference between expectation for follow through here versus expectation for follow through? And they're all in the same sector. That's why I'm comparing them. You can see the trade flag. This is one of the better. You can see the trade flags here, the neutral. This is one of the better sectors. But wouldn't it make sense to look at one of the better performing stocks in the better performing sector? And that is alignment, right? So there's XLY. All right. Give me one moment here. All right. Pup, you want to come in? It's on out there. Give me 1 second. Come on. Okay. There she is. Y'all got the. Oh no! Y'all didn't get to see the pup. There she is. Hey, pup. Say hi. Hi. Okay. All right. So there is the breakdown of where the sectors are in terms of relative outperformance. Now, there's another way to do it. A lot of you see me do it with this Koifin. And take a look. XME, the number 2 sector, XLY. By the way, the number 3 is XLC. And looking at XLC, again, a lot of outperformance. And then now I can crack it open, take a look at what's going on inside it. So if I know that this is a relative outperforming sector, let's open this up. All right. What's a yes? Interestingly enough, EA, Charter, TMUS, Disney, Netflix. That's where, if you're looking for continuation, that those are going to be. And by the way, just don't take my word for it. When you see I have a symbol that has consistent green candles and a red momentum, and I'm sorry, a green momentum and a green trend. So consistent green candles, green momentum, and green trend. What I would love for you to note is it punching up to higher highs and higher lows? Disney, yes. Netflix, yes. EA, yes. Google, yes. And Google has consistent green candles, but not a green trend. Charter, yes. All right, now look at where we don't have consistent green candles. What do I mean by consistent? At least 3 to 5 green candles in a row, at least, right? I don't have at least on 3 to 5 on Meta. That's a big cup of nope. T, right? Notice I didn't put that in the good list. It's okay, right? But it's a little too much yellow. So notice the more green candles we have consistently, the more that there's a green trend. That's where the follow through is, right? That's where the follow through is. All right. Questions here on question on the Koifin. Yeah, so thank you, Daryl. I should say comment. Yeah, if you're using Koifin and you haven't yet, yeah, this is a free service. I love this. I love this service. It's a great way to look at the way in which ultimately the sectors, not just individually, but comparatively, line up against each other. Everything in trading is a comparison. There's no, this is good without looking at something else that's less good. It is really a ranking. Yes. All right. We've got a question here on Intel. Sure. What's my take on Intel? It's a choppy range that bounced off a floor. And much like a lot of the rising tide in the broader averages, we can make a really good argument for it breaking out. And that's the way I would look at Intel. But if I'm going to dig a little deeper, right? Let's dig a little deeper at Intel, because it's never what do I think of Intel? It's always a comparison, right? So starting off with a stock really means for me that we've gone through the alignment, we've gone through a top-down process. So if I take a look at where Intel is weighted, right? That's the first job. Where is Intel weighted? And then that's where, for those of you that are watching Intel, you're probably watching, tech broadly, but really where is Intel weighted? And it's not a high concentration weighted name in a lot of things. You're not going to see it near the top of the list in major sectors and in major in the indices. Obviously it belongs to tech. So then I would have to ask myself, if I were comparing Intel to, say, other stocks in QQQ, right, or other stocks in XLK, would this be an outperformer? Would this be a name that I would say is stronger than Netflix, stronger than Amazon, right? Or you can get more specific to Intel's competitors, but please make sure you do a relative performance comparison. And then you ask yourself, and I'm trying to think even where Intel is heavily weighted anymore in terms of sectors, where I could break down a sector that has stocks that would be considered in that group. And I can't think of a major one. I actually can't think of one. But always do that relative performance comparison. And then at that point, you can see, okay, is this the technology stock that I want to go with or not? And XLK would probably be the best place to start. I can't think of anything else. So Intel would have to look better than the bullish names that I like in XLK, right? Is it better than Microsoft? For sure. Is it better than Apple? Absolutely. But is it better than NVIDIA or CRM or Cisco? No. Is it on par with something like Oracle? Probably. So I'd probably put it on the level of interest that I have in Oracle, which would definitely be bullish, but not as high as Cisco or Nvidia. So that's relative performance, gang, and that's a process that we do in the sector sequence mastery. It's a process that we really have to be good at in order to find our way into symbols that have the most likely. Ooh, I didn't want to do that. That have the most likely follow through. Okay. All right. Let's see. What else do we have here? Thank you for the question. And Daryl, I'm glad Koifin has been working out for you. Awesome. Awesome. All right. Next is Srinivasa asks, when would I consider that the market is overbought given the market activity in the past 3 days? Srinivasa, I do not ever, and thanks to the question from our essential room, I do not ever consider overbought in a trend. So if I'm looking at a trending symbol, I would not consider it ever overbought because trends are naturally imbalanced, favoring overbought. So trends, that's not actually verbiage that I would ever use. In choppy symbols, then I can think about overbought, oversold. So it's got to be really Srinivasa on a symbol by symbol basis, sector by sector basis, right? Index by index basis to ever say, okay, this is overbought. By the way, I'll also equally say this. I don't really in any way am concerned about what's overbought, right? If I'm long, like I am in a number of places right now, I have resistance levels that we're going to proactively use to scale out, just as we scale in. But where we're overbought really isn't of concern, because as long as the Federal Reserve is committed to rate cuts, I just want to find where there's support, arguably maybe oversold, right? If you ask me, hey, do I consider where the market's oversold? That would be a yes, because I have a bullish bias and I want to get long, right? So that's the way that I think about overbought. And there's just such an odd interest in terms of, and I know that's not what you're doing, or I hope it's not anyway, of top picking, oh, this has gone too far. The road side is littered with the wreckage of traders who thought XYZ could not go higher, right? So overbought, especially in the context of a trend, is really, really a difficult and I think probably not productive thing. Oversold, though, completely different conversation. Am I still long? What positions am I in right now? Sure, YB, this is what went out to the. Please know, gang, when I'm sharing you these recaps, I want to make sure this is really clear. This is in no way to suggest that these trades are valid right now, because the way that I trade, there's a validity for the position that is at a specific level. There's a validity for the position that starts at a specific level. So this is by no means a list of, oh, I need to go open Cisco, I need to go open Wells, I need to go open IYT. Not at all, because you'll notice that, for example, with Wells, we bought at 305. We've already scaled out at nearly $11. So these are not in any way suggestions to go buy these names today. We need the next setup. Yeah. All right. So, but those are the positions right now. Okay, YB. Is Amazon hitting resistance? Well, if Amazon's in an uptrend right now, I would presume that resistance would be easier to break than not. Amazon took out significant weekly resistance at 201.25. So, AJ, is on a weekly time frame? You said a weekly? No, weekly is really bullish to me. Here, let me bring this into view. And I don't use cup and handles. I don't use chart patterns, my friend. So if there is one, I'm not paying attention. I use price patterns. I don't use chart patterns. So if there is a cup and handle here, A, it's just not even going to be part of it. And B, I know what it is. I don't believe there's a cup and handle here. What we do have is a breakout through, that's an all-time high. So the idea of resistance near an all-time high, but please know this, gang, I'm not talking about today. I'm not talking about whether today sells off or rallies. I'm talking about the probability over the course of the next few days, weeks, right? So, time horizon has to be a part of the conversation. I'm never discussing, what's going to happen today because, my job is not crystal ball, right? This is what's going to happen. Let's, pretend like we know it's going to be the case in 6 hours from now, right? But no, not in any way to me, AJ. No. Sundu says, and we'll wrap it up here. RH, your trade setup on CRW really works. Thanks. Cool. I don't remember what I told you, Sandu. I don't have this position, but if it's making some money for you, I'm tickled pink. Tim asks, and here we'll wrap it up because this is a good question. Tim asks, SPX is bullish despite the VIX trending down. Please do not think, Tim, thank you for the question. And this is my 2 cents. So take it however you want to take it. Please do not think the VIX is necessarily, and by the way, the VIX trending down would be bullish for the SPX. So I'm not really sure what the question is, but to go a little broader, the VIX is not necessarily the harbinger of what the S&P or the NASDAQ or the broader averages are going to do, but weaker VIX is good for the equity markets, right? We don't want a stronger VIX. So if the VIX is moving higher, S&P, SPY, and your question on SPX, yeah, they should generally be a little bit higher. Okay. All right, gang. As always, thank you so much for being here for Charts and Coffee. I'll see you on Sunday for the top tier outlook at 6 p.m. Eastern. All right, gang. Be good to each other. I'll talk with you soon.